Okay, an unusual alliance there, I guess, with business and the unions on the same page. But what is Paul Howes up to, George?
It's firing a shot across the bow of the Reserve Bank ahead of the board meeting first Tuesday in May that everyone in the country's hanging out for. Seems to be sort of smart politics, but look, the Reserve Bank, we'll take a step back. The Reserve Bank keeps its eye on inflation. That's the first and only thing it really should be keeping its eye on, and when inflation's in the box, it may be able to cut interest rates. The bigger debate that's going around at the moment is that the dollar is elevated because the global economy is telling us to dig, and it doesn't care about anything else we do for a living. So it just wants us to dig, which is fine for the mining sector, but for the 9/10 of the economy that's not hooked up to the mining boom, that is a huge problem. Now, the federal government would like to be able to connect an interest rate cut in May with the announcement of a surplus and a fall in the dollar. If both the Reserve Bank and the government get a fall in the dollar, they'd be wrapped.
If you did get a drop in interest rates the first Tuesday in May, the second Tuesday in May you get a surplus. Would that lead to a drop in interest rates? Surely it would.
Yeah, to the dollar.
To the dollar.
To the dollar. Well, the currency markets might still think that the announcement of the surplus proves that Australia is the last rich nation standing, and they might bid the dollar up again. Look, these things are in the lap of the gods in one respect. But global financial markets don't pay attention to Paul Howes or to Joe Hockey or to Tony Abbott. They pay attention to Glenn Stevens and to Wayne Swan. At the moment, Glenn Stevens and Wayne Swan are actually talking the same book, which is the economy's slow, but there might be room for an interest rate cut. Glenn Stevens hasn't exactly said that, but the expectation is that there'll be a cut in May. Wayne Swan says there's going to be a surplus. A lot of us ask in the economics game, well, how could you get from a $40 billion deficit to a surplus without killing the economy? Wayne Swan says, well, the advice to him from Treasury is, notwithstanding the cuts that they're factoring in, the economy will still be growing.
Just on that, and that is the question that's being asked, and Fran Kelly asked that question of Julia Gillard this week.
What do you say to those people who are worried about that kind of withdrawal?
Well, I'd say don't worry, because we'll be returning the budget to surplus in circumstances where we are forecasting around trend growth.
Now, this is going to be a massive withdrawal, Gerard, of money from... can they argue that they can maintain trend growth in that situation?
Well, obviously that's the advice that's coming from Treasury. And, I mean, Treasury can be wrong and it can be right. It is a big withdrawal of money from the economy, but there is a good reason to go to surplus. There's also an argument against it. You know, all these things are 60-40, 70-30 arguments. It's going to be a very tough budget, but they're committed to it for political reasons, but also I think the government believes that this is the right thing to do. I mean, I've spoken privately to some ministers and they believe this is the correct action. It's not simply being done for political reasons to get to a surplus.
And I wonder with Paul Howes, should I go back to that, whether he was acting as a bit of a spokesman for ministers who can't put pressure on the Reserve Bank.
Going on there, Barry. Look, the interesting thing about Paul Howes's intervention in the debate is that this is not actually something new. He has said this, I think, many times before. But in the current climate, when there's been more pressure for an interest rate cut, you know, sometimes timing is everything in politics. So this time it got some traction. He got a lot of airplay with it. But it is also a fascinating set of alliances, isn't it? Because you've got the two major parties kind of in furious agreement, although very disagreeably, that the budget should be put back in surplus. And then you've got many sections of the business community, the unions and the Greens, all on the same song sheet basically saying essentially don't make swinging cuts because parts of the economy are teetering on recession in the southeast corner of this country. So it's an unusual set of alliances that have been brought together in this climate.
Now, they're all well aware of what the Reserve Bank does for a living, and they should be aware, Paul Howes even should be aware, that for the best part of a generation the Reserve Bank has been establishing its independence, and one of the reasons we got out of the GFC with an economy still growing was that the RBA had built a monetary buffer going into that boom, into the bust, against John Howard's better judgment, but still the Reserve Bank didn't listen to John Howard, had a good interest rate reserve, a buffer, which was able to cut through the GFC. Now, if we want to be having panicky cuts in interest rates, if every time somebody calls a doorstop we'll cut interest rates, well, I think we're back to the old system, and we know that that didn't work.
But anyway, the much louder message coming from the government to the Reserve Bank when they withdraw all this money is that it's overdue anyway.
You ought to be supporting us.
It's fairly clear to them
with a cut in interest rates.